Hello, I'm Carlos, also known as Dr. Aquino, and I'm your instructor here in Business 120, Principles of Accounting 1. Well, I was waiting for the past 10 minutes to see if somebody would show up, but it seems that at least tonight, I'm not very popular. But anyway, I want to share a few things with you. Starting, let me do one thing. Let me share my screen with all of you. So if we look now, you're able to see my canvas here. And under web meetings, you're going to see that I have already scheduled all the future live events we have. We have one in week 3, meaning 2 weeks from today, another one on week 5, and the last one on week 7. Well, first of all, this first week, exceptionally, we are having this live event one time only this week, and it is on Thursday. So starting on week 3, as you can see in the schedule, so week 3, week 5, and 7, they have 2 sessions. And the reason for that, it's because I know that some of you are not available to have this call at night. So we have 2 options. And the options will be a weeknight, usually Wednesdays. And also on Saturday morning, we have a second one. So if you look right here, you're going to see, for example, in 2 weeks, we are going to have a live event on Wednesday, the 27th, from 5 p.m. to 5:45 p.m. Pacific time. And we are going to repeat that on the Saturday, November the 30th, from 7 a.m. to 7:45 a.m. So this is one of the things that I would like to share with you. The other thing I want to talk today, it's about the assignments. So I have followed you on your LearnIt and also on the assignments per se. And just a reminder, the assignments are due in 2 days. And it is very important that you try to do that and submit it to me. I understand that some of you, you have a busy week, but you know, the best thing in an online class is to see if we can create some discipline and do not accumulate things. If you need extra time to submit, please send me an SMS or an email, and I will be glad to see what we can do about that, okay? And I would like to offer you, if you are struggling with the contents in the week, and if you want to have a one-on-one with me, so I posted in my, let me go back there, on my, let me see here. Under live events, I'm telling you, I'm available for meeting with you Mondays and Wednesdays from 5 to 7 p.m. Pacific time. But it is very important that we schedule that before. So we don't have more than one student at the same time, so I can devote my complete attention to one of you. And also just to be sure that I will be here waiting for you to call. So, and I'll be on the Zoom room waiting for you. So it is very important that at least 24 hours before you want to talk with me, that you shoot me an SMS or an email, okay? Okay, what else we have to talk today? I'm going to show you what I plan to have to be the agenda for today. I saw, looking at Yellow Dig, some of you were amazed by the opportunities in having a career in accounting. So I selected 2 videos about reasons to be an accountant. So those are personal experiences that were shared about, you know, the things that really were amazing about pursuing careers in accounting. And I strongly suggest that you look at the second one to start with, Cool Careers for Accountants. So you're going to see people who are CPAs, certified public accountants, who have different careers in different companies. Very interesting cases. So that is going, like, I was amazed to see what was in there. So the plethora of different companies and the nice things that professionals in accounting can do. I also, I suggest to you now, the second list of videos is called Introduction to Accounting, and that is from YouTube. There's a page called Accounting Tube. And in that, you have a lot of very good, simple, down-to-earth videos. And that can help you understanding in a very simple way all the concepts and how to apply them. So those videos definitely complement the information you have from the book and help you to understand accounting better. I know there's a myth that accounting, like math, are horrible areas and that it's very difficult. But my wife is a psychologist and she keeps on telling me, so if you tell yourself that this is difficult to do, it's impossible to achieve, it will become difficult to do and impossible to achieve. So let's demystify accounting. So this is a very important tool. As a matter of fact, we used to call accounting the language of business, because as we go to a company, the company depends on accounting for everything they do to be successful. And no matter if you have an economy that is blossoming or you have an economy in crisis, so there will always be employment for accountants or for people who understand accounting, because it is really a key part of business. Okay, I would like to share with you, I put together from the textbook a stack of PowerPoints. So you can see here an overview of chapter 1, which is the chapter of the textbook that is covered in week 1, starting with the importance of accounting and why we need to do that. So accounting is important in identifying transactions or events that happen in a company, recording them for future use or future referral, and communicating in terms of reports that we call financial statements. So accounting is an information and measurement systems that identifies, records, and communicates information about an organization's business activities. It is, as I said before, it can sound dry, but it is very important. So who are the users of the information that comes from accounting, which we call financial information? Everybody in the company, everybody outside the company. So for example, external users. So if my company needs money, so the lenders need to know how is the health of my, the money that is circulating inside the company. So what is the level of my debt? What is my capacity to pay back the money that I eventually will borrow from these people? So shareholders is everybody that in a way is impacted by the activities of the company. Let's say now that the company decides to open a new plant in a small town, so that will increase the number of jobs for locals. And if the company, has good financial, it is in a good financial situation, and that is reported by the financial statement. So the local population can definitely predict that while now there are a certain number of jobs, but there's potential for getting more jobs, to be created, because the company is growing, there's a demand for their products. So therefore, they will need more labor to be able to continue growing and delivering whatever they have to do. The governments want to know about that, and also not only to see that we went through the 2008 crisis recently, and the government was monitoring companies to see how they're doing. And we had some plans from the government to solve some companies, but also it's about taxation. So the government needs to be sure that companies are paying their due, their part in terms of taxes. And also, while they want to check if there's some kind of a community serving approach, so the company has the capability and is using part of the taxes that are due to the government to instead help communities, which is called the corporate social responsibility. Consumer groups, external auditors, and customers in general. So if you want to invest in a company, like buy also a share, so you need to understand that you're investing your money. You need to understand how healthy is the company, if they're planning to give dividends, for example, to the subscribers, the ones who have the shares, or they're about to go into bankruptcy. So that means that this is not a good place to invest. So a lot of companies, depending on the type of company, they are by law, they are demanded to publish their balance sheets and other financial statements in newspapers and make that, or websites, and make that like in the public domain. Internal users, so executives, managers, internal auditors, the sales staff, the budget analysts and controllers, they all need to have that information at the tip, of the fingers, because, let's say that I intend to have the sales effort in one area, but in order to do that, so I need to know if I increase the sales, so we have the money that can buy the input to manufacture the items that I'm selling, or if I have the resources to do an advertisement campaign on TV or in other medias, or if I'm going to participate in a fair, if I have the resources to pay for travel and lodging of the people who are going there. So companies depend heavily on their financials. And the control of the financials is done by using accounting. So also we have here, a graphic that a little table and showing that the opportunities in accounting. So as you can see here, there are so many information, so many areas that depends on accounting, like FBI investigators, entrepreneurs, appraisers, estate plans, legal services. So account information is widespread in our life. When we earn money, we pay taxes, we invest savings, we budget earnings and plan for the future. If we want to go with our family on vacation on a cruise, we need to understand how much money we have in the bank, how much money we are going to make between the day we decided to go and the day we really travel. Do we have all the money to, enough cash flow, which is the difference between the money that gets in minus the money that goes out, to be able to purchase the tickets, to be able to buy clothing, or to make all the preparations for this trip. So that is accounting in action. So what else we can talk? Ethics, it's very important in accounting. So I have also included, I skipped one slide because I was expecting people to come to this live event, and we had some exercises here. For example, to identify the users as external or internal users of accounting. So ethics is a key concept because, we have seen in the past companies that try to hide how much money they're really making what was the level of the debt. So not showing the shareholders and other people that were impacted by their operations, like the government, the communities, what was the real situation, because they were unethical. So a famous case is Enron, and I can try to find the link of a video that shows, you know, what bad things that the company did, uh, kind of deceiving shareholders and other key stakeholders. And so because of a lot of things that happened, mostly in the 1990s in the United States, so we had some acts passed in the Congress to try to avoid dubious operations or behavior of different companies, like the Sarbanes-Oxley, also called SOX, and the Dodd-Frank Wall Street Reform and Consumer Protection Act. So recently, the Dodd-Frank was in the news because there was some maneuvers in the Congress to change the scope of that. And at the end, I think nothing changed. As a matter of fact, it became stronger. But there is also, unfortunately, when you have a lot of lobby on our Congress and we have different interests, so there's always one of the groups that try to push for things that are beneficial to their own interests. So that's when our congressmen and women, they need to be tough and really think about the American people and not only about the individual interests of companies and corporations. Anyway, to control all that, all this framework of accounting, the language of business, we have some principles and assumptions and that control that. And this whole framework is known as GAAP, which stands for Generally Accepted Accounting Principles. And the so-called GAAP, it varies from country to country. So that in Europe, for example, the principles and assumptions that are embraced are a little different from the ones that we use in the United States. So if you are in Europe, or if you want to work in Europe, for example, so you need to adapt yourself, you need to learn about the differences in practicing, in doing accounting in the European Union when compared to the United States. So it is important that with the GAAP, the financial accounting is governed by concepts and rules, and those rules are the GAPs. And the idea is to make information relevant, reliable, and comparable. I think we should make a parenthesis here. We are talking about accounting, but accounting, as a matter of fact, when we look at accounting, we can divide accounting into three areas. The so-called tax accounting, which impacts, for example, when you or your parents, they prepare in April, around April, everybody leaves that for the last minute. We prepare our income statement and we send to the IRS. So before doing that, people who make a little more money or they don't want to get involved with doing that, so they can hire some firms that will do all the tax accounting for them. Corporations which have a much more complicated accounting, so they use that, or they have people inside that can do that part. There's financial accounting, which is basically what we'll be, exploring in this course 1 of the principles of accounting. And there's managerial accounting, which we'll touch that, but we'll kind of wrap it up in the second class. And the main difference, so financial accounting is more about the accounting cycle, the preparation of financial reports. And then when we go more into costs and forecasting and other things that are more into the operation of business, so then we are talking about managerial accounting. So it is accounting that helps managerial decision making. So, but we'll give more details about that in the future live events. or in some handouts that I can make available to you. Anyway, moving forward, because of the gap, so as I said, principles and assumptions of accounting are considered in this framework. So, we have 4 accounting principles: the measurement or cost principle, the revenue recognition principle, the expense recognition or matching principle, and the full disclosure principle. In each one of them, you have all that information in your notes, in your textbook, in your Learnits, and also here in the slide. So I'm not going to go through this. So, and together with that, so we have the so-called accounting assumption. So going concern assumption, the business entity assumption, the monetary unit assumption, and the time period assumption. So that said, we need to look at the different kinds of companies that will be using that, and how much they are impacted by accounting. So the forms of ownership. So we can have the so-called proprietorship, which is usually when you want to open it's a sole owner, and so there's a form. So there's all this procedure that you have to follow. So you go for a sole proprietorship. Or if you want to join your efforts with a partner, with a person that you trust and have common interests, so you can do a partnership. And so you are partners in crime, we used to say. Hopefully no crime will be committed. And when it becomes really complex with a lot of people involved, and eventually with shareholders owning the company, so then we have the corporation. So here, we have the major attributes in terms of accounting and in terms of the structure for the 3 forms of ownership. So accounting has constraints as well. And the 2 constraints that we consider are materiality and cost benefit. So materiality, it's because only information that would influence the decisions of a reasonable person need to be disclosed. And cost benefit, only information with benefits of disclosure greater than their costs need to be disclosed. So those are 2 constraints that can be determined by also the type of situation you're facing, the type of ownership that you have. So I have included some practices here, and then we can jump into the so-called accounting equation that is basically going to be the main aspects of our first 4 weeks in this class, basically half of the class. And it is all about, so you need to have a balance between the 2 sides. So you have assets on one side, and you have liabilities plus equity on the other side. And then we can prepare journals for recording transactions, which we're going to see in weeks 2 and 3. We have adjustment for that. But you have to keep in mind that those 2 sides, they have in a way to be always equal. So if you make a transaction, so you have, accounting has some kind of a double entry system. Every time you have a transaction, so you have to input information on both sides just to be sure that things continue to be balanced. And I'm going to show you an example here. Let's say that a company, well, we have people who want to put cash in, invest money to create a company. And the company is called, let me see, Fast Forward. So Chess Taylor, which is one person, he has money. And he wants to invest $30,000 in cash to start a company. So when we look at that accounting equation, we are going to have 2 sides. We have the asset side and we have the equity side changing. So let me show you this. So you see here, originally we would have a complete empty equation here. So we will have no information at all. However, now that Chas wants to put some cash, so $30,000 enter on assets under the account cash. And at the same time, $30,000 enter as an equity on the right-hand side of the same equation. So now you have, before you have 0 and 0, now you have 30,000 and 30,000. So at the end, if you look down, you're going to see that 30,000 equals 30,000. So the accounting equation is balanced. So we are fine. So let's see one more transaction. So now the company decides to purchase supplies, pay in cash. So cash is an asset and supplies it's an asset because it's something that you have in your hand and it can be used. So both will be on the left-hand side. In this case, so since we are not going to enter anything on the right-hand side because, liabilities are not changing and equity is not changing. So we need to make the arrangements on the left-hand side. Always, it's a dual entry. So we have a double entry every time we have a transaction. So therefore, we need to have one positive and one negative on the left-hand side. So we guarantee that the equation continue to be balanced and will remain in $30,000. So that's what we're showing here. So see, when we want to say minus something, we are subtracting, we don't use the sign in accounting, we use a parenthesis. So any number between parentheses is a negative number. So therefore, when we look at that, the first line is what we had originally from the previous transaction. So we have $30,000 cash and $30,000 capital in the equity area. So now we are using $2,500 of cash to buy supplies. So therefore, the cash account will reduce from of $2,500 and supplies will increase in the amount of $2,500. But look at that. If we add all together, so cash now goes down to $2,750, 27.5, 27 and 500. However, we have a new account supplies, it is 2,500. So when we add the left side of the accounting equation, we still have 30,000. And that's exactly what we have on the right-hand side. So our accounting equation continues to be balanced. So we could keep on going. So I can show you transaction 3. Let's say now that I want to buy equipment in cash. So equipment, it's something that I hold in the company, and so therefore it's an asset. It's something that I can use for doing things, for producing things. So, and I'm paying $26,000 in cash. So I don't owe money to anybody because I use cash. Therefore, everything goes on the left-hand side of the equation. But again, since we are not inputting anything on the right-hand side, we need to be sure that on the left-hand side, so we reduce one account, but we increase another one. So let's take a look at how our accounting equation will become. So before we have cash and supplies, now we have a third account on the left-hand side in assets that's called equipment. So what happened? We are paying in cash and the equipment is worth $26,000. So $26,000 is positive under the equipment account. However, we spend cash to do that. So 26,000 negative, or 26,000 is subtracted from the cash account. So if we had before 27,500, excuse me, when we subtract an extra 26,000, so now my cash account will have only $1,500. together with the $2,500 of the supplies, a $26,000 in equipment, altogether is $30,000. So my accounting equation is still in balance. And we could keep on doing this for hours here, different examples. So, but I want to spare you from that. I want to jump into the next concept that is important in week one, which are the financial statements. And of course, during this course and the next one, we are going to look into those statements in detail. But now it's just, introduce them to you and provide you with an explanation of their existence. So we have 4 financial statements, namely an income statement, a statement of owner's equity, a balance sheet, and the statement of cash flows. So let's start with the income statement. That is basically a report that shows revenues and expenses, and therefore we will have a net income or a loss, and that over a period of time due to activities that provide me with earnings. So the statement of owner's equity explains that part of the accounting equation that we talked, that is the equity. The balance sheet describes the difference. It is a portrait of the whole accounting equation because we have assets on one side and on the other side liabilities and the equity. And finally, the statement of cash flows identifies receipts and payments over a period of time. But it's very important for you to see that they are all interconnected in a way, so one statement will feed the other statement with the information needed to prepare that statement. So here we have a quick example. So starting with the income statement, you see that the net income will feed the statement of owner's equity. And then the total of capital of the company in December will go into the balance sheet as equity. And now, so if we move, forward, we see that the cash asset comes from the statement of cash flows. So I would like you to take a look carefully on the slides that I'm going to make available. And so you can see the relationship between all these 4 financial statements. Another thing that I strongly suggest, if you go back to the agenda, so explore the videos, particularly Introduction to Accounting 1 and Introduction to Financial Accounting 1, because they will review these concepts, but it's much more enjoyable because you have a voice there that has not my accent. I think it's a British accent, which, by the way, it's becoming a huge success in the TV in the United States. So everybody that has a British accent always get, the best places, the best characters in TV shows and movies. So it's fancy to have a British accent. Unfortunately, I have a Portuguese accent, which is my Brazilian side speaking out loud. So that said, I really want to thank you for your non-participation today, but I'm quite sure that you are going to be reviewing this video, and I look forward to meeting you face-to-face in week 3, now in 2 different sessions. And my intent is to bring a person who is a real-world accountant and also a scholar. So he is a doctor, Dr. John Parker, I had the privilege to working with him in the past for many years. So he's a very smart guy in doing accounting. And now he's currently the CFO, the Chief Financial Officer for one organization. So I'm going to see Probably it is more likely that I'll be able to have him on the Wednesday evening session. On the Saturday morning, it is a little more complicated. Usually people don't want to do those things over the weekend. But anyway, I thank you very much. I wish you a great rest of the week. And do not forget that assignments are due. Assignments are in 2 days. We have the week 1 assignment, and do your best to finish the Learn It's too. Okay? You take care. You know my number. Send me an SMS, and I'll be here to support you the best way I can. Thank you very much, and have a good night.